4, 3, 2.
Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Nasdaq PHLX options trading floor as we do each quarter for quadruple witching options expiration Friday. Joining me throughout the morning is Sean Cruz. He's the manager of trading strategies over at TD Ameritrade. Thank you, as always, for joining me. It's great to have you in from Chicago.
Great. Thanks for having me.
All right, so let's talk about this. Stocks are a little bit lower as trade wars have fueled up again. Trump approved tariffs between $50 to $100 billion on Chinese goods, although it's not clear when these are going to take effect. It's been interesting with this trade war rhetoric. Markets have been taking it relatively in stride, even though they're down a bit this morning. Do you think it's at the point where it's almost the little boy that cried wolf, and it's just a lot of rhetoric that's out there?
I think we saw this started popping up in January, and I think the markets were a little bit more sensitive to any headline that cropped up around this. But I do think you're correct that they've been a little bit more desensitized, and they realize a lot of this is just positioning, getting some rhetoric before they go back to the table to talk some more. So this is really almost just a repeat script of the U.S. proposes something, China says, okay, well, if you do that, then we're going to retaliate. And then they end up going down, sitting down in something at least a little bit more watered down.
It seems as if like the negotiation tactics usually happen behind the scenes, but now it's more in the forefront.
Yes.
And again, that's why I think the markets have taken it relatively in stride, because even though we're down a little bit on Friday morning, it's nothing too extreme.
I think so. We've actually had some pretty good news this week as well. You heard some pretty solid economic data, strong consumer numbers yesterday. Fed moved earlier this week, but they also dialed up their expectations for growth. ECB dialed back its bond buying, announced they were going to end that in December, but they also announced they were going to keep rates fairly low as well. So I think there's some solid underlying growth that's going to support markets here and make them able to handle a lot of this headline risk that we've been seeing. They're going to handle a little better.
It really was an interesting week. You had the M&A window opening, and I think that was really the key news this week. Of AT&T Time Warner, that purchase was completed on Thursday, but it also opened up the conversation for healthcare M&A that's out there, and then also Comcast and Disney and Fox. I think that's really going to be one of the drivers through the summer. In addition, we're going to go into quarterly earnings as well.
So I think this deal was actually very interesting because it was a vertical merger, and you don't really see these vertical mergers often go all the way to decision from a judge. Those usually get hashed out ahead of time. So to actually see a ruling get written down, an opinion put down on paper, now you have precedent for a lot of these other deals. So that's why you saw industries across the board really focusing on what the outcome of this was going to be. And it really has opened up not only the media space for more deals, but now you're starting to see that crop up in healthcare as well. And whenever you get talk of M&A or deals coming into any sector, you generally see multiples expand across that sector. And I think we've seen that play out so far this week.
I think media is really interesting to look at too, because it's all about content.
Yes.
You wonder if there's going to be in the future perhaps only 8 to 10 content providers out there. You know, Amazon, Google, all these names are always thrown into the mix, but it's really going to change the media landscape.
I think so. And I think the big thing there is the way these mergers are going down. This isn't, I own these channels, you own these channels, let's just combine all. These are now, well, here you have a little bit of the outlet, you've got AT&T, you have the network, we've got the content, let's start finding mergers that way. And I think that was a really big aspect of this deal. And that's why everyone was watching this, not only see how this would play out for media companies, but there's also implications for Netflix, for Amazon, because they're starting to get into this space as well.
Let's talk about the economic data. We'll go back to that. That came out this week. CPI was strong, PPI was strong. We had the rate hike, which was expected from the June meeting. The third one is definitely on the table. Are you seeing traders price in for the fourth one at this point? Because I think what came out of the press conference sounded a little bit hawkish to me.
I think so. And I think the fourth hike was a little bit more of a maybe not, but more likely not going to happen. Now, I think they're giving a little bit more credence to the possibility that we might see that fourth rate hike. And if you look at the projections that they put out, it's almost hard to imagine some of their projections playing out without them having to get that fourth rate hike in, because they talked about inflation moving up to their 2% target, maybe a little bit above that. They talked about unemployment going down to 3.6%. And they dialed up economic growth expectations. So with all of that, that almost seems like the perfect backdrop where you would want that fourth rate hike, or if the Fed could do it without disrupting things too much, that's the kind of environment you would need it in.
I mean, if you look at the employment data, there's more jobs available than there are people looking for jobs.
And that's the theme we've seen building up slowly but surely, that just the strength of this job market getting tighter and tighter. And that is something that it's not totally unprecedented, but you don't see that happen very often.
Well, it's great if you're coming out of school now compared to what it was 10 years ago in the beginning of the financial crisis. It's almost like the buyer's market for employees at this point.
Absolutely. And I think for a lot of those students coming out of college right now, going and trying to find that first time job, they should keep that in mind when they're going out there and searching. They might have more options than, say, graduates 10 years ago.
All right, let's talk about crude oil, because that's really going to be in the news next week. You have OPEC on June 20th and the 21st. It's interesting that you have the Russians and the Iranians dialing up supply projections, but we also have the report out of the IEA that demand is actually moving higher as well. So it seems as if that balance could potentially be struck.
And I think the big thing I'm going to be looking at out of the OPEC meeting, it is Russia, it's Saudi Arabia. I think that's going to be important because they are just a massive potential source of supply for the market. But there's also Iran and Venezuela who are coming in, and they don't want any more supply being put out there. So I think that's going to be something to watch. But the underlying demand, I think, remains strong. So I think the supply side is really what you're going to want to watch in terms of the oil market.
So it feels as if traders are going to have to tactically trade around a lot of these headlines. Is that what you're seeing over at TD Ameritrader? They're getting more tactical, less correlative, not just going with sectors, but specific stocks, specific themes.
They do. And if you look back into February and March, when we saw a pretty strong pullback in a lot of these tech names, Facebook, Apple, we actually saw a lot of retail clients coming in at TD Ameritrade and buying those names. And then over the past month, as they started to maybe hit those pre-pullback price levels, or some even hit all-time highs, TD Ameritrade clients started selling and taking some profits in those names.
And that's what I love to hear, because they're learning the way that institutional traders trade. And I find that, that's fascinating, particularly with all the tools that are available to retail traders that have never even been available to institutional traders. And again, it makes, you see the Nasdaq comp hitting all-time highs every day this week. I don't know about today with the market opening lower, but to sell at these levels, buy low, sell high, they're doing it right.
And we saw the buying sustaining gradual throughout that period where the stock prices were a little bit depressed. And like you just pointed out, as they got back up to these higher levels, you started seeing them take a little bit of profits, and they're going to start rotating into some other names that maybe they see some opportunity. And AT&T was one that we actually saw our clients both, across the board, and also our millennial clients at TD Ameritrade were going in and buying AT&T. So that was a very popular name for our clients to buy.
All right. Well, thank you very much for joining me. And don't forget to join us throughout the morning. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.